Hey everyone, it's Nick from Sure Dividend here, and in today's video, I'm going to be talking about the 2018 Dividend Aristocrats, which are a group of stocks with 25 plus years of consecutive dividend increases. Now, before we begin, I invite you to click down to the description and download our list of all the Dividend Aristocrats along with important financial metrics like dividend yields and price to earnings ratios. This will allow you to follow along and see what the financial metrics are for each company as we discuss them in alphabetical order by sector. The first sector we're going to talk about is consumer staples. Now, consumer staples is very overweight within the Dividend Aristocrats index because of the general stability and brand recognition of a lot of these companies. So we're going to go through every company in the Dividend Aristocrats one by one, starting with the consumer staples companies. The first company we'll talk about is Archer Daniels Midland. Archer Daniels Midland is one of the largest agricultural companies in the world. It operates in 160 countries and generates annual revenue of more than $62 billion. The company has four business segments: agricultural services, corn processing, oilseeds processing, and wild flavors and specialty ingredients. ADM has increased its dividend for 42 consecutive years and trades on the New York Stock Exchange with a market cap of $24 billion. Next up is Brown-Forman, which is an alcoholic beverage manufacturer that's most famous for its Jack Daniels brand of whiskey. Outside of Jack Daniels, Brown-Forman has a diversified product portfolio focused on whiskey, vodka, and tequila. Brown-Forman has increased its dividend for 33 years in a row and trades on the New York Stock Exchange with a market cap of $26 billion. Next up is Colgate-Palmolive. Now, Colgate-Palmolive is a diversified consumer goods company focused on oral care products like toothpaste and personal care products like soap, home cleaning products, and pet food. The company's most recognizable brands are, unsurprisingly, Colgate and Palmolive, but also Speed Stick, Ajax, Soft Soap, and Sanex. Colgate-Palmolive has increased its dividend for 55 consecutive years and trades on the New York Stock Exchange with a market cap of $60 billion. Next up is the Coca-Cola Company. Now, for most investors and consumers, this company needs no introduction because it's the world's largest beverage company. Coke owns or licenses more than 500 non-alcoholic beverages, including both sparkling and still beverages. Coca-Cola has more than 20 brands with $1 billion in annual sales. Coke has increased its dividend for 55 consecutive years and trades on the New York Stock Exchange with a market cap of $183 billion. The next consumer staples Dividend Aristocrat that we'll talk about is Hormel Foods Corporation. Hormel is a branded food company that owns major brands like Skippy, Jenny O, Spam, Hormel, and Dinty Moore. Hormel was founded in 1891 and currently generates annual sales of more than $9 billion. Hormel has hiked its dividend for 51 consecutive years and currently trades with a market cap of $17 billion. Next up is Kimberly-Clark. Kimberly-Clark is a global consumer products giant that operates in 175 countries. The company's product portfolio is focused on paper towels, diapers, and tissues. Kimberly-Clark currently operates in three segments: personal care, consumer tissue, and KC Professional. Kimberly-Clark has increased its dividend for 45 consecutive years and trades on the New York Stock Exchange with a market cap of $38 billion. Next up is McCormick & Company. McCormick is the world's leading spices and seasonings company. It was founded in 1896 and currently sells its products in more than 150 countries. McCormick operates in two segments: consumer and industrial, and generates more than $4 billion in annual revenue. The company has increased its dividend for 31 years in a row and trades on the New York Stock Exchange with a market cap of $14 billion. Next up is PepsiCo. Like Coca-Cola, this company needs no introduction for most consumers. PepsiCo is a global food and beverage giant that generates more than $60 billion in annual revenue. The company's revenue is evenly split between its food and beverage segments. Pepsi's major brands includes Pepsi, Mountain Dew, Pure Leaf, Tropicana, Gatorade, Frito-Lay, Quaker, and Naked. Pepsi has increased its dividend for 45 consecutive years and trades on the NASDAQ exchange with a market cap of $154 billion. The next consumer staples Dividend Aristocrat that we'll talk about is Procter & Gamble. Procter & Gamble is a global consumer products giant that sells products in more than 180 countries and generates over $65 billion in annual sales. More than half the company's revenues are derived from outside of North America, which means that this consumer staples Dividend Aristocrat is very diversified outside of the United States. Procter & Gamble has increased its dividend for 61 consecutive years and trades on the New York Stock Exchange with a market cap of $195 billion. Next up is Cisco Corporation. Now, there's two Cisco corporations. One is spelled with a C and one spelled with an S. So this is, make sure to understand that distinction before we explain this company's business model. This Cisco is the largest food distributor in the United States. The company distributes fresh food, frozen food, dairy products, and beverage products. The company generates about $55 billion in annual revenues, with the majority of these sales coming from restaurant customers. Cisco has increased its dividend for 47 consecutive years and trades on the New York Stock Exchange with a market cap of $32 billion. Next up is Walmart. the world's largest retail corporation. The company was founded in 1962 in Arkansas by Sam Walton and now generates annual sales of $485 billion. Walmart has more than 11,600 stores in 28 countries around the world. The company has increased its dividend for 43 consecutive years and trades on the New York Stock Exchange with a market capitalization of $262 billion. The next consumer staples dividend aristocrat that we'll talk about is Walgreens Boots Alliance. Now, Walgreens could be classified as a consumer staples company or a healthcare company, depending on what part of its business you emphasize, but the Dividend Aristocrats Index actually indexed it as consumer staples, so that's what we'll stick with in this presentation. Walgreens is the largest retail pharmacy in the US and Europe. The company operates more than 13,200 stores in 11 countries. Today's Walgreens was created by the merger of Walgreens with Alliance Boots back in 2014. Walgreens has increased its dividend for 42 consecutive years and trades on the NASDAQ exchange with a market cap of $66 billion. That concludes our discussion of the consumer staples dividend aristocrats. Next, we'll discuss the industrial sector. The first industrial dividend aristocrat that we'll talk about is A.O. Smith, which is a global leader in energy-efficient products and solutions. The company manufactures a variety of residential and commercial water heating equipment, as well as water treatment and air purification products. A.O. Smith has increased its dividend for 25 consecutive years and currently trades with a market capitalization of $11 billion. The next industrial dividend aristocrat that we'll talk about is Cintas, the largest manufacturer of corporate uniforms, entrance mats, restroom supplies, fire protection, and first aid products. The company was founded in 1968 and now generates annual revenue of more than $5 billion. Cintas has increased its dividend for 34 years in a row and currently trades on the NASDAQ exchange with a market cap of $18 billion. Next up is Dover Corporation, an industrial manufacturer with revenues of approximately $7 billion. The company's products includes equipment, components, and specialty systems, and Dover operates in 4 segments: engineered systems, fluids, refrigeration and food equipment, and energy. Dover has increased its annual dividend for an amazing 62 consecutive years and trades on the New York Stock Exchange with a market cap of $16 billion. Next up is Emerson Electric, a global industrial manufacturer with operations in more than 150 countries. Emerson Electric operates in 2 segments: automation solutions and commercial and residential solutions. The company has increased its dividend for 60 consecutive years and trades on the New York Stock Exchange with a market cap of $45 billion. The next industrial dividend aristocrat that we'll talk about is Illinois Tool Works, or ITW, which is a manufacturer of engineered fasteners and components, industrial equipment, and consumable systems. The company has been in business for more than 100 years and currently generates annual revenue of more than $13 billion. Illinois Tool Works has increased its dividend for 54 consecutive years and trades on the New York Stock Exchange with a market capitalization of $57 billion. The next industrial dividend aristocrat for discussion is 3M Company, a diversified global manufacturer that produces more than 60,000 products sold in 200 countries around the world. 3M was founded in 1902 as the Minnesota Mining and Manufacturing Company and currently generates over $30 billion in annual revenue. 3M has increased its dividend for 59 years in a row and trades on the New York Stock Exchange with a market cap of $139 billion. The next industrial dividend aristocrat is Pentair, an industrial manufacturer headquartered in the United Kingdom. The company operates in 2 segments: water and electrical. Pentair will soon split into 2 publicly traded businesses, one for each business segment. You can read more about this split on our website. Pentair has increased its dividend for 41 years in a row and trades on the New York Stock Exchange with a market cap of $13 billion. Next up is Roper Technologies, which designs and develops software including both software as a service, or SaaS, and engineered products and solutions. Roper is extremely diversified and develops software for a multitude of sectors, including healthcare, transportation, food, water, and education. Roper Technologies has increased its dividend for 25 consecutive years, which means this is its first year being a member of the Dividend Aristocrats, and the company trades on the New York Stock Exchange with a market cap of $30 billion. The next industrial dividend aristocrat is Stanley Black & Decker, a diversified industrial manufacturer that operates in 3 business segments: tools and storage, security, and industrial products. Stanley Black & Decker has increased its dividend for 50 consecutive years and trades on the New York Stock Exchange with a market cap of $25 billion. The next industrial dividend aristocrat is W.W. Grainger, one of the largest business-to-business distributors of maintenance, operations, and repair supplies, or MRO supplies. The company operates more than 700 physical branches and 30 distribution centers in North America, which help it to generate annualized sales of more than $10 billion. W.W. Grainger has increased its dividend for 46 consecutive years and trades on the New York Stock Exchange with a market cap of $16 billion. The next industrial dividend aristocrat is General Dynamics, a diversified aerospace and defense company that was originally incorporated in 1952 through the combination of the Electric Boat Company, Canadair, and several other smaller businesses. Today, the company generates more than $30 billion in annual revenue, with a major concentration in the aerospace sector. General Dynamics has increased its dividend for 25 years in a row, which means that this is its first year being a dividend aristocrat. The company trades on the New York Stock Exchange with a market capitalization of $66 billion. That concludes our discussion of the industrial sector. Next up, we'll talk about healthcare dividend aristocrats. The first healthcare dividend aristocrat we'll talk about is Abbott Laboratories, which is a diversified healthcare conglomerate that operates in four main product segments: nutritional products, branded generic pharmaceuticals, diagnostics, and medical devices. Abbott Laboratories has increased its dividend for 45 consecutive years and trades on the New York Stock Exchange with a market capitalization of $109 billion. Next up is AbbVie, which was spun off from Abbott Laboratories in early 2013. Notice the similarities in their names. AbbVie is a research-focused biopharmaceutical corporation that is known for their wildly popular drug Humira, which is simultaneously AbbVie's most important product and the highest-grossing drug in the world. If you include AbbVie's history as a wholly owned subsidiary of Abbott Laboratories, the company has increased its dividend for 45 consecutive years. AbbVie trades on the New York Stock Exchange with a market capitalization of $179 billion. Now, interestingly enough, AbbVie is actually larger than Abbott Laboratories now because of the company's impressive fundamental and stock price performance since its spin-off in 2013. Next up is Becton Dickinson, a medical device manufacturer that operates in two segments: medical and life sciences. The company has more than 40,000 employees in 50 countries, helping Becton Dickinson to generate annual revenue exceeding $12 billion US. Becton Dickinson has increased its dividend for 46 consecutive years and trades on the New York Stock Exchange with a market capitalization of $58 billion. The next healthcare dividend aristocrat is Cardinal Health, which is one of the big three drug distribution companies along with McKesson and AmerisourceBergen. Cardinal Health has increased its dividend for 32 consecutive years and trades on the New York Stock Exchange with a market capitalization of $21 billion. Next up is Johnson & Johnson, the world's largest healthcare corporation. J&J generates annual revenue of approximately $71 billion, operates in more than 60 countries, and employs 131,000 people. The company has increased its dividend for 55 consecutive years and trades on the New York Stock Exchange with a market cap of $352 billion. The next healthcare dividend aristocrat we'll talk about is Medtronic, a medical equipment manufacturer and one of the largest healthcare companies in the world. The company employs more than 90,000 people and generates annual sales of nearly $30 billion, with a significant international presence. Medtronic has increased its annual dividend for 40 years in a row and trades on the New York Stock Exchange with a market cap of $108 billion. That concludes our discussion of healthcare dividend aristocrats. Next up, we're going to talk about the consumer discretionary sector. The first consumer discretionary dividend aristocrat we'll talk about is Genuine Parts Company, a distributor of automotive replacement parts, industrial replacement parts, office products, and electrical materials. The company's corporate name flies under the radar, but its flagship business, Napa Auto Parts, is well known to most consumers. Genuine Parts has increased its dividend for 61 consecutive years and trades on the New York Stock Exchange with a market cap of $13 billion. Next up is Leggett & Platt, a diversified manufacturing company that produces a wide range of products, including bedding components, bedding industry machinery, steel wire, adjustable beds, carpet cushioning, and vehicle seat support systems. Leggett & Platt has increased its dividend for 46 years in a row and trades on the New York Stock Exchange with a market cap of $6 billion. Next up is Lowe's, the second largest home improvement retailer in the United States, behind Home Depot. Lowe's was founded in 1946 and generates $65 billion in annual sales today. The company has increased its dividend for 55 consecutive years and trades on the New York Stock Exchange with a market cap of $72 billion. The next dividend aristocrat we'll discuss is McDonald's, which, like Coca-Cola and Pepsi, needs no introduction for most consumers. McDonald's is the largest publicly traded fast food company in the world. It operates more than 37,000 locations in over 100 countries, which help it to generate over $24 billion in annual sales. McDonald's benefits from one of the strongest brands in the world. Its iconic golden arches logo is instantly recognizable to millions, if not billions, of consumers around the world. McDonald's has increased its dividend for 41 consecutive years and trades on the New York Stock Exchange with a market capitalization of $126 billion. The next dividend aristocrat for discussion is Target, a large discount retailer that operates over 1,800 stores in the United States. The company's offerings to consumers is based on the belief that they want a more favorable shopping experience in exchange for slightly higher prices. Target has increased its dividend for 46 years in a row and trades on the New York Stock Exchange with a market cap of $38 billion. The next consumer discretionary dividend aristocrat that we'll discuss is VF Corporation, a diversified apparel conglomerate that owns well-known brands like Vans, Timberland, The North Face, Kipling, and Wrangler. The company was founded in 1899 and generates annual sales that exceed $12 billion. VF has increased its dividend for 44 years in a row and trades on the New York Stock Exchange with a market cap of $30 billion. Next up is the financial sector, which actually has relatively few dividend aristocrats within it, as we'll see. The first is Aflac, an insurance company that specializes in supplemental health insurance, specifically accident, short-term disability, critical illness, hospital indemnity, dental, vision, and life insurance. The company has a significant presence in Japan, where it generates about 70% of its premium income. Aflac has increased its dividend for 34 years in a row and trades on the New York Stock Exchange with a market cap of $18 billion. Next up is Cincinnati Financial, an insurance company that offers business, home, and auto insurance. The company is known for investing a higher proportion of its insurance float in equities rather than fixed income, which helps it to outperform over time. Cincinnati Financial has increased its dividend for 57 consecutive years, and it trades on the NASDAQ exchange with a market cap of $12 billion. Next up is Franklin Resources, an investment management company that was founded in 1947. The company manages the Franklin and Templeton families of mutual funds and currently has more than $750 billion of assets under management. Franklin Resources has increased its dividend for 36 consecutive years, and it trades on the New York Stock Exchange with a market cap of $21 billion. Next up is S&P Global, which was previously called McGraw-Hill Financial. S&P Global is a diversified financial information provider and credit rating agency that's most well known for overseeing the S&P 500 index, which is the most popular benchmark for U.S. equities. S&P Global has increased its dividend for 44 years in a row and trades on the New York Stock Exchange with a market cap of $48 billion. Next up is T. Rowe Price, an investment management company that provides mutual funds advisory services and separately managed accounts for individuals and institutional investors, retirement plans, and financial intermediaries. The company has more than $900 billion in assets under management. T. Rowe Price has increased its dividend for 31 consecutive years, and the company trades on the NASDAQ exchange with a market cap of about $28 billion. That's it for the financial sector. Next up is materials. The first materials dividend aristocrat is Air Products and Chemicals, a business-to-business distributor of industrial gases and one of the largest producers and distributors of atmospheric and processed gases in the world. Air Products and Chemicals has increased its dividend for 35 consecutive years, and the company trades on the New York Stock Exchange with a market cap of $36 billion. Next up is Ecolab, a diversified cleaning product company that operates in three major business segments: global industrial, global institutional, and global energy. Each operating segment is roughly equal in size. Ecolab has increased its dividend for 32 consecutive years, and it trades on the New York Stock Exchange with a market cap of $39 billion. Next up is PPG Industries, the largest paint and coating company in the world. It was founded back in 1883 and currently generates annual revenue of about $15 billion. PPG has increased its dividend for 45 consecutive years, and it trades on the New York Stock Exchange with a market cap of $28 billion. Next up is Praxair, one of the largest industrial gas companies in the world. The company generates more than $11 billion in annual sales, with nearly half of the revenue derived from outside of North America. Praxair trades on the New York Stock Exchange with a market cap of $43 billion, and the company has increased its annual dividend for 25 consecutive years. The next dividend aristocrat in the materials sector is Sherwin-Williams, the world's second largest manufacturer of paints and coatings, behind fellow dividend aristocrat PPG Industries. Sherwin-Williams was founded back in 1866 and generates nearly $16 billion of annual revenue. The company has increased its dividend for 39 consecutive years and trades on the New York Stock Exchange with a market cap of $38 billion. Next up is Nucor Corporation, the largest steel producer in the United States. Nucor operates in three reporting segments: steel mills, steel products, and raw materials. Nucor has increased its dividend for 44 consecutive years, and the company trades on the New York Stock Exchange with a market cap of $21 billion. The next sector we'll discuss is energy, which has just two dividend aristocrats. The first is Chevron, one of the largest oil and gas supermajors in the world. The company is headquartered in San Ramon, California, and generates annual earnings of more than $9 billion. That's earnings, not revenue. Chevron has increased its dividend for 32 consecutive years and trades on the New York Stock Exchange with a market cap of $224 billion. The second dividend aristocrat in the energy sector is ExxonMobil, the largest publicly traded energy company in the world. Exxon can trace its roots back to Rockefeller Standard Oil and currently generates more than $240 billion of annual revenue. Exxon has increased its dividend for 35 consecutive years and trades on the New York Stock Exchange with a market cap of $318 billion. The next sector we'll discuss is information technology, which has just one Dividend Aristocrat. That company is Automatic Data Processing, a business services company that operates as the leading payroll and human resources outsourcing business in the United States. ADP has increased its dividend each year for 42 consecutive years and trades on the NASDAQ exchange with a market cap of $51 billion. The next sector up for discussion is real estate, which also has just one Dividend Aristocrat. That Dividend Aristocrat is Federal Realty Investment Trust, a real estate investment trust that primarily owns shopping centers. The trust also operates in the redevelopment of multi-purpose properties, including retail, apartments, and condos. Federal Realty has increased its dividend for 50 consecutive years and trades on the New York Stock Exchange with a market cap of $8.5 billion. The next sector is Telecommunication Services, which again has just one Dividend Aristocrat, AT&T, the largest domestic telecommunications company when measured by market cap. The company's only competitor of similar size is Verizon Communications. AT&T has increased its dividend for 33 years in a row and trades on the New York Stock Exchange with a market cap of $218 billion. The next and last sector that contains Dividend Aristocrats is the utility sector, which again has just one Dividend Aristocrat. That Dividend Aristocrat is Consolidated Edison, or often called Con Ed. Con Ed is a regulated electric and gas utility that generates approximately $12 billion of annual revenue. The company has 4 operating segments: electric, gas, steam, and non-utility. Con Ed has increased its dividend for 43 consecutive years and trades on the New York Stock Exchange with a market cap of $24 billion. That concludes our discussion of the Dividend Aristocrats today. I wanted to thank you for taking some time to watch our video and invite you to do 3 things. The first is to email me a video recommendation at nick@shoredividend.com. The second is to like this video and leave us a comment telling us what you thought of it and how we can improve for future videos. And the last is to subscribe to our channel, Sure Dividend, if you're interested in learning more about investing in high-quality dividend growth stocks for the long run. Thanks for watching, and we'll see you next time.